Welcome to AXR Investments Weekly Updates, your go-to source for the latest market trends, investments insights, and financial news. Today, we're covering the week of February 18th, 2025, and we will look at 4 different aspects of the market and then do a conclusion. First, the stock market overview. Despite economic uncertainty, stocks continued to rise last week. The key factors influencing the market. Let's look at the tariff headlines. The US reinstated a 25% tariff on steel and aluminum imports with no loopholes or exemptions. Let's look at the inflation worries. Investors are monitoring inflation trends as the Fed remains cautious. Let's look at the retail slowdown. January retail sales data was weaker than expected, hinting at a pullback in consumer spending after the holiday season. Why does it all matter? Stocks shrugged off tariff concerns as the new trade policies won't take effect until April, leaving room for potential negotiations. The US dollar weakened and interest rates dipped, creating a more favorable environment for risk assets like equities and commodities. Second aspect we will look at would be the tariffs and inflation impact. So tariffs and inflation remain a hot topic for the Federal Reserve or the Fed. Fed Chair Jeremy Powell's testimony before Congress suggested the central bank is not in a hurry to cut interest rates due to ongoing inflation risks. Inflation data highlights the core consumer price index, also known as the CPI, was higher than expected in January. The Fed's super core inflation gauge, excluding food and housing, surged at its fastest pace in 12 months. A 15% jump in egg prices was just one example of inflation pressure. The retail slowdown. Consumers appeared to be pulling back on spending as January retail sales came in below expectations. This could be a sign of waning economic momentum after a strong holiday shopping season. What this means? Higher tariffs could raise costs for manufacturers, potentially impact auto, construction, and industrial sectors. Also, with metals already rallying, investors are adjusting expectations for inflation risks. Third, let's examine the metals market and its reaction. Metals prices soared following tariff news. Copper surged nearly 20% this year, with gold and silver also posting double-digit gains. Key trends that are driving the metal prices: investors are repricing tariff risks across the metal sector, not just aluminum and steel. Copper trading on the Chicago Mercantile Exchange, the CME, hit a record high premium compared to the London Metal Exchange or the LME, indicating strong demand for US-based copper supplies. Also, many industrial metals were already rising before the tariff announcement, making this an even bigger catalyst. Now let's look at gold. Gold's growing appeal. Despite high interest rates and a strong dollar last year, gold still rose nearly 25% in 2024. Safe haven demand for gold is increasing as investors look for stability amid trade tensions and inflation concerns. The central banks are stockpiling gold. In 2024, global central banks added 1,045 metric tons of gold, making the third consecutive year of over 1,000 metric tons in demand. 81% of central bankers plan to increase their gold reserves over the next 12 months. Many central banks are also reducing their US dollar reserves in favor of gold. Fourth, let's look at the investment outlook. For stocks, the LPL Strategic and Tactical Asset Allocation Committee, also known as the STAAC, remains neutral on equities. Preference for US stocks over international markets. Growth are favored over value stocks. While sentiment remains strong, potential risks include lingering inflation, trade tensions, and geopolitical uncertainty. Let's look at bonds. Modest exposure to preferred securities is recommended. Core bond sectors like US Treasury, agency mortgage-backed securities, and investment-grade corporates are more attractive than riskier bond assets. The STAAC is neutral on duration exposure, meaning they aren't recommending extending bond maturities at current levels. The metals and commodities. Tariffs have pushed metals prices higher, which could hurt profit margins for manufacturers. Gold's technical and macroeconomic tailwinds suggest its uptrend could continue. Compared to stocks, gold is still relatively cheap on a historical basis, making it an attractive investment opportunity. Now let's summarize everything. The bottom line, markets are still optimistic, but risks from inflation, tariffs, and global trade disputes remain. Tariffs are driving metal prices up, creating both investment opportunities and inflation concerns. Gold continues to shine as central banks buy more and investors seek safe haven assets. And that's your weekly market update from AXR Investments. Please like, share, and subscribe to stay informed on market trends and investment insights. Please don't forget to hit the notification bell so you never miss an update. See you next week.